Pattern trading was on fire last week, guys, and this week I have two more opportunities to share with you, along with some big news that is coming to the markets this week that you should put on your radar. Welcome back to the video, guys. If you guys are brand new, my name is AKIL'S. I'm a forex trader. I'm also a trading coach over at www.tier1trading.com. I don't shamelessly promote what we do enough because we usually don't need any promotion. But if you are interested in learning how to trade, if you are serious about becoming a consistently profitable trader, check us out, www.tier1trading.com. It kind of speaks for itself once you're on the platform. So back to my great week, right? Last week, patterns were on fire. I was 3 for 3 until Friday, and non-farms stopped me out by a single pip, making me 3 for 4. And speaking of the platform I mentioned earlier, as I logged on to the platform to get some comfort, right? I was tired of crying and screaming into my pillow after a single loss, because we all know that a single loss means the end of the world. I was greeted by Gregory, who said, "Man, just missed getting stopped out on the euro dollar by 1 pip, still in it." And you know what, Gregory? You're number 1. Just kidding, of course. Kinda, but we like to have fun with our traders. It's a sense of community. We have fun through the wins. We have fun through the losses. It's great to have people that you can joke around with trading, because most people don't understand what the heck we're doing. But enough of the past. Let's hop into what we're looking at this week. Again, 2 patterns I'm going to share with you. But first, I'm going to resume our warnings about what's happening on the economic calendar. I've been keeping you up to date and telling you that December is going to be busy, December is going to be busy, December is going to be busy. And we have now reached that busy time. I guess technically we started on Friday with our non-farm payrolls, but this week we have the central bank stuff really kicking off. So hopefully I do my best to edit it and put something nice up for you, but here's what we're looking at this week. Monday and Tuesday are going to be a little bit dull, not too much. We have RBA, Australian interest rate decision coming on Monday, but there's no expected change there. We never know what they're going to say going forward with monetary policy and their statements and stuff like that, but that shouldn't be too much. Tuesday is a little dull as well, but Wednesday, that's when we kick off. Some very important news for the dollar. CPI, that's going to have a direct influence on maybe not the interest rate decision that's coming next week, but future guidance for that. We have a Bank of Canada interest rate decision as well, where there is that expected cut. Press conferences are the funky part of that too. Then on Thursday, we have an interest rate cut by, or interest rate decision, potential projected cut by the Swiss National Bank. We have the same for the euro and the ECB, and then we have PPI and unemployment claims coming out for the dollar, followed up by Friday where we have GDP for the GBP, right, for the pound. And then next week you have the rest of the kind of the monetary stuff coming out. So just to keep that on your mind as you go forward in the market, again, monetary policy, interest rate decisions, and the speeches and conferences and statements that go along with it, those are the biggest kind of fundamental cog in the market. That's how the market likes to panic and set itself up for the future. Just a reminder though, right? Typically, the setups are done well in advance. The reactions to what you see, unless something crazy comes out, is just kind of the panic in the market. So try your best not to get caught up in that stuff. So now heading to the technicals. What we're going to look at here is going to be on the dollar Canada on the 4-hour chart. Now, again, keep in mind, CPI for the dollar coming out this week, the most important news. Also for the Canada, interest rate cut coming out as well. So 2 things happening here. But what we have is an at-market bat pattern. And I want to talk about this because there are a few ways you can trade these patterns. We'll focus on 2 ways. One is going to be the aggressive way. The other is going to be the conservative way, right? So our bat pattern looks like this. Our starting point is going to be right up here. This is going to be our X. If I grab the right thing, I've got a camera right in front of my screen, so it's hard to do it. Our first leg down is going to be our A leg, right? So this move is going to be our X to A, our swing high to swing low. We call this an anchor leg. We then look for a retracement, right? This is going to be our B leg, depending on where this retracement comes to. So how deep it retraces, this tells us what pattern we have on the radar. Because this comes to about a 50% retracement, this is going to be a bat pattern. We followed it up with our C leg right here. Zoop. And then what we're doing is we're looking for our D completion. And in the case of the bat pattern, that D completion is going to come at the 886. Now, whenever we talk about patterns, if you guys are new, right, we always talk about patterns they typically come in periods of consolidation, right? And you can see kind of the ebbs and flows, how it has to go down, then up, then down, then up again, all within kind of a range, right? This is why we generally see them in periods of consolidation. And in markets like last week, where we weren't really moving too much, at least in the beginning of the week, these things pop up all over the place. I told you I had 4 opportunities in my portfolio. I only traded 9-pair portfolio. So the pairs that I looked at are only over here. There were a handful more on these as well. And they're not flashy. They're not exciting. They're not like super profitable in a sense where you're making a million pips and you're riding the trend like some type of wild rapid river rider person, words, right? But they come in, they do their job. I call them steady Freddies. They're kind of boring, but they produce. They imagine it like an NFL running back that just gets 4 yards a carry. That just like, it's not pretty, but he just runs up the middle, gets 4 yards, walks back, gets 4 yards, walks back, gets 4 yards, right? It doesn't really seem flashy, doesn't make the highlight reel, but if you know football, if you average 4 yards a carry, you are amazing. Well, maybe not amazing, but good. Keep in mind, I am a Cowboys fan, so 4 yards a carry for us this year would be amazing. So I'm a little bit biased by that. But anyway, they do their job. They've been a mainstay of my trading really since I started, at least once I started being consistently profitable. And although I trade other stuff as well, again, these are kind of my good old dependables, right? So if you're an aggressive trader, right, you are trading this pattern at the decompletion. The decompletion is going to be our 886 in the sense of a bat pattern, right? So right at this level. So going off the Trading Unmasked workshop, you guys remember limit orders, right? The aggressive orders. What you would be doing is you would put a limit order right at the 886. So if you're front running a little bit before the 886, and as soon as price action gets to that level, you're in. Now, this can be a little scary. I've done videos and shorts on this in the past, but have you ever heard of anything called the falling knife, right? I was always told as a younger trader, don't catch the falling knife. And I would imagine a knife falling from the ground and me holding my hand out. I'm like, yeah, you probably shouldn't catch it. It's a bad idea. It will poke you. It will cut you, all bad things. So stay away from it. This would be an example of a rising knife. You're standing on top and someone throwing it up, I guess. But the falling knife essentially is a high momentum move that is going in your direction, and as a trader you're looking to get involved in the opposite direction. So it's like one big game of chicken, and it's really scary. Just imagine yourself if you're looking at this in real time. I'll kind of go into replay mode, that you're eyeing up this pattern, you have everything measured out, you're like, yeah, I'm gonna put my limit order right here and I'm gonna get ready to sell, right? You're excited, and then you see this thing again. I got to move my camera a little bit because it's right in front of my replay. I'm gonna do this. Let's do this a little bit. There we go. Nope, that didn't work. How about we try a different way over here? There we go. Perfect, right? So imagine you're doing this, and then all of a sudden, big candle's coming up. Okay. High momentum candle, right? Big candle coming up. High momentum candle right into your order, right? We spoke about high momentum candles in the workshop. High momentum, bull strength. This is like standing on the train tracks while a train is coming towards you and you're playing this game of chicken. Like, all right, you're going to reverse, you're going to reverse, you're going to reverse. It's really scary, and psychologically it causes a lot of traders to bail on what they're doing. So it takes a lot of bravery to do it. Bravery can come by building your belief. Building your belief comes from learning the correct way, back testing, and you see that, oh, I know what it's supposed to do at here. It shouldn't be that scary because I've seen this 1,000 times, and within those 1,000 times, it gives me a positive expectancy. Most people don't build their belief. Most people don't back test, and that's why they don't have the courage and the mindset to stay in trades like this. But we also talk about adjusting your trading style based off your personality. So if you are someone that is uneasy doing this, you never want to put yourself in a trading situation where you're consistently uneasy. So there's another approach, right? Instead of just putting a limit order there and playing chicken, maybe you do something like this, right? You isolate the zone. You say, hey, the completion zone for this bat pattern is going to be between this 886 and the high of my X leg right here, this level of structure. Right, I already had that drawn out. I don't know why I did it again. It's been on the road all weekend. I'm tired, but I want to do this video because you guys requested more videos, and I give the people what they want. But you're saying, okay, if price action gets in this zone, then maybe I go down to a lower time frame and I look for a more conservative reason for entry. Now, there's pros and cons of this. Of course, the pros are that if this thing reverses right away, which happens frequently with advanced patterns, you're not involved. However, if it is a pattern that blows up in your face and you're waiting for confirmation and you never got it, you're not involved. So before you get in the comment section, I love that you guys are in the comment section, aside from you weird bots that keep asking about Bitcoin stuff. Right, get out of here. Don't ask what is the best, right? In general, in trading, there is no best of everything. The question you should be asking is, instead of what is the best, it's what is the best for you, me, you. I don't know where to point. You get what I'm saying, right? What is the best for you personally? You would be me and me would be you. Cut that. But so we can go down to the lower time frame here. And what you can do is you can look for an alternative way for entry. Now, there's a few things that happen in this specific opportunity. One, if I just kind of go back to reality. Sorry, got to move the camera again because I can't see anything. Where am I at here? I'll cut it. There we go. Right there. Camera's back normal. I need a better placement for this thing. Been lazy today. So we had a few things happen here. One, if we zoom in, right, for you guys that are familiar, what do we have? I should put that back up there. There we go. What do we have right here? What type of setup is this? This is called an ascending channel, a rising channel, a deceleration pattern, no matter how you want to phrase it or call it. This is a loss of momentum pattern. Again, we see the big high slope with these aggressive bullish candles, big, large, and in charge. And then we have this one right here that gives us a little rejection, which is a little bit of a clue, like, less bulls, more bears. Then we have an inside bar, smaller range candle. The slope is getting less steep. And then we put the icicle to cake with a lower low, lower close, which is an entry signal used by many of the traders on our platform. So this would have been an example of, whether you're looking at the loss of momentum pattern or simply just the lower low, lower close, an example of using a more conservative approach. You also have the RSI overbought as well, which you can add if you're looking at like a CTS type of thing. The RSI is this little indicator down here. When it goes above my green line, that means overbought. That's actually a sign of lots of strength, which is what we had. But we also know that lots of strength typically ends in a little bit of a relief, right? Imagine you like holding your breath for a long time. I'm not going to do it because I can hold it very long. This will be a very long video, but eventually you have to exhale in order to take that next breath. So think about the RSI like that. Not a reversal indicator. It's a strength and momentum indicator. But this would be an example of alternative approach. So bat pattern, a little bit under market if you weren't involved. It's not necessarily at market, but it's kind of at that level. An even more conservative approach would be waiting for like a double top. So waiting for this thing to kind of retest the highs, prove that this holds, right? Double top classic pattern right here, and then look to catch it on the way down. So again, there's a few different ways you can trade these: aggressively, conservatively. It all depends on kind of what you want to be as a trader. I promise you two. Let's go to one more. Let's go to one of my favorite pairs when it comes to pattern formations, the Aussie-Canada. The Aussie-Canada was actually a late addition to my trading portfolio. I only added it, I'm going to date myself now, 8 years ago when I got rid of some other pairs, because it's a dirty, nasty pair, right? If you look at this thing historically, like it kind of goes sideways. It's unappetizing. It's kind of like a better version of the Euro Pound, which is also an awful pair. So you look at this thing, you're like, man, this sucks. It doesn't really do anything. It just goes sideways. But what did I tell you earlier? Sideways is perfect for advanced pattern formation. So I love it because it gives pattern after pattern after pattern after pattern after pattern. And because we don't really see any big trendy breakouts, these patterns tend to work, right? So it is one of my favorite pairs for that. And we've got another one setting up here. So I gave you a bat that is at market. Here is a bat that you can put on your radar for later this week. X to A to B, B to C. And again, if we come up to this 886, that is going to be our D completion. And our zone is going to be from that up to our X leg. So hope you enjoyed the video. Hit that like button, show some support. Make sure you subscribe to the channel. Lots of videos have been uploaded lately, getting great reviews on the most recent ones I put out. Some great responses about full-time trading and how we kind of shifted the idea of how you think that to be. Words again. But I look forward to doing more. I got some more video podcasts coming out for you guys on some really interesting topics. So make sure you support the Trading Coach podcast as well here on YouTube, but also on your favorite podcasting app. All right, I need food. I need rest. Until next time, plan to trade, trade to plan. Take care.
I wanna be the best in the game, invest in my name. Check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change. Possessed by the thought I'll be free one day from society's restraints. Money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display.